Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
That's right, ladies and gentlemen. Welcome back to another episode of the AJ Brown Show, where AJ and the amazing team at Trading Trainer have been helping all of the investors make sound decisions for the entire 2024. Today, as we head into the new year, AJ, welcome back, episode 124. Happy New Year, Merry Christmas. How you feeling today?
I'm great. I mean, I got this here, I don't know what you would call it, this puffy, fuzzy jacket, and I haven't taken it off in days.
Yeah, every time I see the intro, it's like, oh, that's the summer AJ, and then we're heading into the new year where the weather's starting to kick in, and now we get frigid AJ. And I think today's episode is the 2024 episode, right? Next
Yeah.
week we're heading into the new year. In January we're heading into a new presidency. Markets are still at these highs. What are your thoughts as we go into the new year? What are you telling your viewers, your members? What is the mindset that, one, to close out the year, I guess, and then two, what are we doing heading into 2025?
Well, so the first thing, let's talk about the present, right? The present is that we've got a few extreme voices speaking loudly. That's a common phrase I say at this time every year. It basically means that most investors have taken the 2 weeks off. They're not going to be back until January 6th. That's a Monday. They're not going to be back. And so the folks that are actually moving the markets, and you can tell that it's just a few folks because of volume being so light, it's usually those extreme investors that just can't keep away. And extreme investors tend to have extreme opinions. And so they might move the markets one way or another over the next few weeks, right? But, coming on January 6th, we always expect a correction. When the masses return, they are sitting down at their trading terminals and they're like, yeah, okay, let's set this ship right. So, what I'm telling folks that are part of our programs is you can definitely trade the next week or two, but just make sure that you are protected and hedged when the masses return, because there's oftentimes a beginning of the year correction.
Yeah, and last show, we talked about the Fed, quote unquote,
Hmm.
putting some of the brakes on their verbiage of how many rate cuts that they're going to make, and that seems to have created a bit of a pullback, a bit of a hesitancy. But overall, when we look at the whole 2024 year, it's been a good year for most of
Mm.
the stock market.
Definitely has been a good year. The S&P reached record highs. But hey, take a look at my chart, Sib. We started to see some weakness. What I'm using here is my downloadable indicator called the Confirming Indicator MA. And it puts these arrows here. And I've got the analog version down here so I can kind of evaluate how reliable these moving average crossings are. And so when I overlay my other drawing, so let's draw trends. This latest pullback actually surpassed the previous gains. And so that kind of changes things for us. That means that the uptrend that we've been seeing, gosh, not only since the beginning of August, but if I go back a whole year, like you kind of, mentioned in your opening comments, there was this huge uptick twice. We had these like little pullbacks, which are very healthy, one in April and one at the end of July, beginning of August. But then we, for the most part, you can see we rallied, rallied, rallied. Well, we're stalled. yet again. But, it's a little bit different than those pullbacks that we saw in April and in July. This one seems to not be a pullback per se, but really just a stall. So if I come back, Sip, up to the present here, you know, we pulled. Let me actually put on my measurements, my rulers here. So when we pulled back almost exactly to where we started, a little bit more. And so that signifies to us that, hey, we've stopped the current rally. But we didn't pull back, right? We didn't go all the way down to about 5,800. We stopped it where we started. And now we seem to be moving back up, but it already seems that we're getting some weakness. We got some weakness yesterday, and then today we're back down. And you'll notice we're reversing again in this red zone. When you get subsequent red zone reversals, it means we're in a sideways choppy market. And then if I look at the VIX, which measures kind of uncertainty, well, when we first pulled back, we shot up in uncertainty only to correct back down. But now we're coming back up. A lot of traders think this is bad news, right? Especially traders who only go long and short the equities. But here at Trading Trainer, this is actually fantastic news for us because we love sideways choppy markets, especially when VIX starts to go higher, because that means when we sell our premium, we're number one going to get to stay in very consistent trades. We're not going to have to, keep changing our symbols every month or two. We're going to get to have trades that last maybe a half a year or so. And then in addition, we're going to get premiums that are larger than normal. So this is a premium traders like heaven. And so I'm kind of stoked, even though most traders that are out there right now are uncertain and confused.
Yeah, and another headline from that I continue to come across with some of these pundits is hey folks, get ready for a potential 10% retracement. It could happen. They're looking at historical data. And so what does that potentially look like? What are we up for the year, I guess? And then if we went back 10%, the front line news would be like, oh my God, the market's falling. But if you take the lens out a little bit more, it would seem like a healthy correction. And that's where some of the work that you do with the members of the community is helpful, because you guys are trying to take advantage of that pullback. It's not always bad news. And like you said, the chop is there. Would that be good or bad? 10%?
Well, let's first rewind what you're saying. So what are these folks talking about? Well, we like to compare the 3-month bond. So I'm switching from equities market to bond market. We like to compare the yield on this guy to the yield on the 10-year bond. And so what economists have been talking about, so you might notice right now, this is the present numbers that I've got on the screen. The 3-month bond represents short-term lending, right? It's at about 4.3% right this minute. And the 10-year, which represents long-term lending, is higher, almost 4.6%, right? You guys see that? Well, that sounds good, and it is good. But what folks are talking about is this yield inversion curve. So this is the 10-year and kind of stacked on top of each other, a ratio. And what we've had, let me go back a little bit further than a year. Let me go back to 5 years. So what we've had for about 2024, even 2023, is you see the zero number, Sip, right over here. Let me make this big. There you go. You see this zero number right here? I'm kind of putting my crosshair right on it. That zero number shows you when the 3-year becomes more expensive than the 10-year. And that historically has been the setup for bad news, specifically when it comes back. And so just in the last few weeks, we've had this line pop back up above the zero line, meaning that things are realigning. Historically, what that means is the beginning of a recession. Every time the yield curves reverse and then reverse back, it's been a recession. Now, this time around, and this is something, if you go back to previous show replays, you can hear Sip and I talking about it. This time we've got an added variable, which is the Fed has been selling off 10-year bonds, which has artificially been playing with that yield. So the big question is will it or won't it? Are we really in recession territory because we're having an event that is significant, has significantly done this in the past? Or is it because we've got kind of an artificial influence, especially on the 10-year bond, with all the Fed quantitative tightening? That's this thing right here where the Fed has been selling off trillions of dollars of bonds into the market. Is this a nothing burger? Nobody knows because it's never happened before. The Fed hasn't ever tried to sell off trillions of dollars of bonds before. So we don't know. Okay, let's assume that it is a big deal, that just like times in the past, when the yield curve inversion goes back to normal, we get a recession. Is a 10% pull really going to be that big a deal? Well, okay. Gosh, look at the beginning of 2024 right here. And look at how much we've gone. We were at about 4,000, just under 4,750. And right now we're trading at about 6,000. If we have a 10% pullback, that brings us back to about 5,400. That's like nothing compared to what we gained. So SIP's absolutely right. If we get a 10% correction, which is recessionary territory, the news headlines are going to be insane. Like, oh my gosh, we're having the worst day of our life. But even a 10% pullback is like nothing compared to what we gained in 2024. So, all to say, here's the big question marks. Are we really going to have a recession, or is this yield curve return to normal a different scenario than what we've seen in the past? That's the first question. The second question is, would a 10% correction actually be that big of a deal? And the answer is no, not really, right? The rally that we've had in 2024, yeah, it might seem bad in the short term, but it'll only be a fraction of the gains we've gained in this last year. So I'm not worried. Plus, I've got, like we talked about, all the option strategies that profit whether we're moving up, down, or sideways. So me and my program participants are going to make gold out of it no matter what. But for the major economy, whether we have a reversal or whether we stay trending sideways, I'm not really concerned.
Yeah, and that's why you have the community. That's why you started Trading Trainer for 20 years now. 21, I think, is what we're heading into. In utilizing these, I don't know, is it 27, 29 different ways to trade options, whether it's up, down, sideways, calendar, earnings, volatility rush, volatility crush. I did find a really interesting tweet that kind of correlates to some of the things that we've talked about in the past. And that's the annual performance for, I don't know, what do they call this basket now? It's not FANG because there's like Tesla and the Magnificent Seven. I think that's what they're going with.
Yeah,
here.
Something like that. The Magnificent Seven. Yes, it's not just Facebook, Amazon, Nvidia, and Google anymore.
Right. Well, Nvidia I don't think was in the FANG, or maybe it was. Anyways, Apple up 34, Nvidia up 183, Microsoft 16, Alphabet 40, Amazon 50, Meta 70, Tesla 83%. And I guess, before we, go on with the rest of the show, this is a concept that we've also talked about, these major names leading a lot of the rally compared to maybe the smaller names. And could that be one of the reasons for the pullback? Could employment, like if we were to go back 10%, where do you see that being kind of led by? maybe even Q1 as we head into 2020? Do we have any risks there that you see? I mean, this one is what comes to mind for me is the difference between these big players and these small players, and small guys is not making as much money. What are your thoughts on all that?
Well, remember a couple of months ago, like in September, we were looking at the difference between the S&P 500, which, those bigger companies have a larger portion of the S&P 500. The S&P 500 is definitely skewed to bigger companies. And then comparing it to a index that shows those 500 same companies with equal weighting, and we saw this huge divergence and then a correction. That was this correction back here during the months of like the summer months, the end of the summer months. We seem to have calibrated a little bit back, meaning that the other companies somewhat caught up, but there's no denying that those 7 big companies are really ruling the roost. And if they correct, the market's going to correct, whether it's through correlation or just because of their heavy weighting. Again, I think that we had a guest last week, Dr. Dave, who was all about kind of treating traders PTSD, for lack of that's simplifying what he does. But the truth is you just got to be cool, right? It's not, if we had a 10%, even a 20% correction, it wouldn't be the end of the world. It would just be a little bit of 2024 being corrected on. And that would just reload everything for higher gains in the last half of this decade. So sometimes you just have to think backwards, right? You just have to, number one, trade each day as it comes. Don't try to future forecast. And number two, think long term. Sometimes we get caught too often not looking past the tip of our nose with data, and we get all wrapped up in the hype, and it makes our trading upset. I take a lesson from Dr. Dave, and I just chill out and trade the medium to long term positions, which is what us premium sellers do. And that's my advice for 2025. Chill out, enjoy yourself, and play the medium to long term positions.
Yeah, and if you don't exactly know how to do that, we've got AJ's quick links for you in the chat. What that'll essentially get you set up with is one, access to all the socials, Instagram, Twitter. Oh, it looks like we got the LinkedIn in there. AJ, we go get some professionals connecting. AJ's free indicator. You may have seen that little red arrow, or red and green arrows to kind of help decide when markets are shifting. Subscription opportunities to our YouTube channel, some other freebies, which is some other tools, some white papers, some other indicators. I think the options lookup tool is in there if you sign up. And then AJ's free workshop. So one of the cool things about this show and just the community is, as markets turn or don't move up or don't move down, AJ and the team has some really good strategies on how to take advantage of that. So go ahead and head on over there and check that out.
I gotta tell you, Sip, let me interrupt you a second. You mentioned the LinkedIn thing that we added to the quick links. We had those guests 2 weeks ago that were talking about their fund for doctors. We had an uptick here at Trading Trainer of professionals, not just doctors, but lawyers and engineers and, folks that are really like busy during the day, but still they want to be able to invest in the evenings. We had an uptick in the last 3 weeks, I think, because of that guest, of people interested. That's why we put the LinkedIn up there. But folks, this, type of trading that we do here at Trading Trainer isn't day trading. It isn't something where you have to be married to your computer during the day. It's actually perfect professionals. It's perfect for folks that are retired. And I don't mean to ring my bell here, but it's also perfect for, we have so many stay-at-home moms that are actually investing and earning more on their invested dollar than even their significant others that are out working 9 to 5. So we've gotten so many success stories this year of, oh my gosh, maybe I don't need to work because, my spouse has gone ahead and brought in more money this year trading your strategies versus me working as a, dentist for the family. It's kind of fun.
Yeah, and just so everyone gets a little bit more context, I'm sure you guys in the internet sphere are getting hit with a lot of gurus and this and that. The one thing that I appreciate about Trading Trainer and your approach, AJ, is you really hone in risk to the
Yep.
point where I think even just with Dr. Dave last week, that psychology of trusting your system, having your risks parameters in place, being able to go to bed at night, being able to wake up in the morning, limited stress. I know that in some of the other markets, that's not the lifestyle. And so I do think that that's why you get, maybe that is why we got some of these professionals, because people are busy taking care of business. But this is a great way to put your money to work, especially with the premium selling. So if you want to learn more about that, head on over to the quick links. Set up for click the register for a workshop, hop in there, watch the webinar. If you have any questions, reach back out to the team and we'll help you out. AJ, we're going to take a short break and then let's talk about the hottest topics of the year. I know we asked our good AI friend to pump out some of the top events of the year, and let's run through them.
Yep.
and get some perspective, and we'll jump into your pick of the week. We'll do our speed round, and then everyone can go back to relaxing and enjoying the holidays before we turn it up in 2025, starting next week. So sit tight, folks. We'll be back in a few seconds. In the meantime, hit that follow, hit that subscribe, hit that like button. We'll be back to talk more.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
So AJ, I know I'm getting old because over the holidays I ate too much and I got sick.
I mean, that's what happens. Isn't that what the holidays are all about?
And it's just like there's so much good food. I want a little bit of the steak. I want a little bit of the lobster, the shrimp, the scallops.
Oh, you had surf and turf, it sounds like.
Yeah, well, it didn't mix well at the end of the day, but I just usually that's like a party, a symptom of partying too much, but I wasn't partying too much. I was just eating. Yeah. But we're going to continue that party next year into the new year. I think that's on Tuesday, right? The 31st is Tuesday.
Yeah.
Right. But in recap for 2024, what are some of the storylines that stick out for you? I know we asked ChatGPT to pump some of these out. What are your
The biggest one's gotta be the Fed dropping interest rates by a whole point. Starting this fall, late summer, they did a half point. That kind of surprised people. And then they did 2 quarter points, one in November, one in December. So dropping the interest rate a whole point, not a bad thing. Of course, they did end the year with some rhetoric about how that's going to slow. It's not going to stay on pace, that they might not have inflation under control. So that's, kind of already started the ball rolling to slow things down. But I think that's some of the biggest news. What do you got?
Yeah, I think that, especially when you look at it to previous years where we almost did nothing, right? Or we
were hiking it.
I would say maybe the tempering of inflation, right? Maybe in the sense that was a really big topic coming out of COVID and the government spending. And then I think it's just the one name of NVIDIA, right? I think NVIDIA had such an influence on
AI, and that's basically the poster girl for AI is NVIDIA. NVIDIA surpassed Microsoft. Microsoft's been the behemoth for the last 30 plus years after, they brought in the personal computers. Even, surpassing Google over the years. Google's, is synonymous with the internet, but NVIDIA surpassed Microsoft. Although, didn't Microsoft partner with ChatGPT on Microsoft Copilot? So I think Microsoft's trying to stay competitive, but NVIDIA, who's the backbone of this AI boom, is a huge behemoth.
I think that also parallels well into the crypto discussion, right? I think
Hmm.
Bitcoin hitting $100,000 was a big milestone, but I don't know if you've seen in the last couple of days that it's almost being brought up to governments as, hey, we should have a strategic fund, and most of them are saying no to this. Like I think I just saw Japan turned it down, and I
Yeah.
wonder what that bodes for the rest of the crypto space in the future, because everyone's talking about it being this uh gold reserve, but I don't know if that's really, gonna be the
I
case.
mean, it's an interesting topic. It always has been an interesting topic. I mean, crypto's not new. Crypto's been around now for about a decade
Yeah.
and a half. Although in the last 5 years, crypto's really been something big. But yeah, you're right. Although in November, the SEC finally caved and allowed some crypto ETFs to be legalized. So we're going one way, but you're right. A lot of governments have been nixing the idea of crypto competing against fiat currencies or national currencies. We'll just have to see how that space, crypto's got a lot of, because there's not much accountability and trackability by design. There's been a few scams. I don't know if you paid attention to the Haktua girl and how she brought up her own crypto, and it basically was a pump and dump scam where she and the two crypto guys, she not as much, although she didn't lose money, she got paid off nicely, but the two crypto guys took money from a whole bunch of people. It had a On its launch, it had a capitalization of 100 million, and now it's worth about 4 million. So anybody who invested in it lost 95% of their investment. So, crypto's got some skeletons in the closet because people can easily take advantage of it. So that's why it's losing credibility in other countries, I think.
That, and how do you decide which one? How do you, like, they all seem to do a lot of the same stuff of sending money virtually, but why should we choose one over the other? And then I saw
Hmm.
uh an interesting post or tweet where they said that there will be computing power that can decipher the crypto or the Bitcoin transaction 4 times as fast. And so if we find or revolutionize something that does it even better, then why is Bitcoin the staple if it was just kind of the first one to show us how to do things? So that's where my reservations with the crypto comes in. Is like everyone still keeps thinking that it can go to the moon, and
Hmm.
all you need is like one government mandate or something, and that thing's pulling back and you're gonna feel it. um I did have another chart that caught my attention for 2024. This is Argentina's stock market, up
Mm.
163% year to date, which is kind of an interesting global story because Argentina had a lot of issues economically in their with the inflation of their currency and things like that. And I don't know what their leader's name is, but he came in and really, I don't know, defunded a lot of stuff, kind of what Elon Musk and company are talking about now. And this is good for the world economy. Have you seen anything on Argentina from?
Yeah. You gotta remember, and we see this every day, right? We see like a company that, um, hasn't changed many of their business practices. They're doing fantastic. They're uh, you know producing a lot of stuff, selling a lot of stuff, and something happens and their stock price goes down. And contrary, we have something where like a company that has no product, just a lot of hype around it, and their stock price goes up. We have to be very careful when we look at stock prices and market prices. So what I think is happening in Argentina, and this is just AJ's perception, I haven't dug deeply into a lot of those companies, is there's a lot of hype in investors. And interestingly enough, different than here in the States. Now, here in the States, there is quite a few investors, but it's still, you know, not the biggest percentage of the overall population. A lot of people in the United States, they look at the Dow, because it's on the news every night, but they're not invested in the equities market. But there's a percentage of us invested in the equities market. In Argentina, it's like 1%, right? It's like hardly any of the Argentinian population is invested in their market. So what you're looking at is an indication of what 1% of the Argentinians think is going on. And they're very excited about the hype, the rhetoric. And we've talked about that a lot, about how hype and rhetoric and FOMO can really affect prices in the markets and prices in individual stocks. I think we're seeing a lot of excitement in Argentina, but will it actually reconcile and be good for the long term? That's yet to see. I think that, you've got to back that up. You've got to actually have something to back up the hype. Now, that gentleman is making it really easy to do business in Argentina. And so a lot of companies are actually, especially since we keep raising tariffs on China, China is no longer what it was 20 years ago, the place where a lot of companies like to go to get things made. Eyes are turning, eyes have been going on Vietnam, Singapore. Now eyes are turning on Argentina as a place where they can move, their enterprises and get things built. So he's ushering in businesses to try to build up the Argentinian economy. But, that's not a fast thing. And the market has jumped up. So we're going to see in the next 3 or 4 years whether this run up in the Argentinian market matches the economy, whether the economy actually grows. So you got to be careful watching, using a gauge. It's kind of interesting when you hear people here talking about, hey, the S&P 500 is at a high. Does that actually affect you? Well, no, but it's a high and it represents the United States. Well, sorta, but not really,
Yeah,
you
like
know?
if the wealth was distributed among a larger population, I think the
That's why we like to work for the little guy.
that's right, and so does our incumbent president, who yesterday tweeted, this little festive holiday card for people.
Oh, the incoming president. Yeah, yeah, yeah.
I think and the reason I brought this up is I
That's
this has
funny.
been the pretty much the major headline, one of the major headlines in the fourth quarter, even the third quarter of the presidential election. Well, now we know who we have
Mhm,
coming in office, and some of these policies
mhm,
are starting to come out. So to wrap up 2024, AJ, in regards to incoming President Donald J. Trump, what are your thoughts on some of the policies and rhetoric that you've been hearing? It seems as if Donald Trump is a guy that wants the stock market to continue to go up, and he's gonna tweet and
mhm,
influence where he can to make that happen.
mhm.
Um, what are your thoughts on that? How should we as investors navigate it? Because I remember the last time around, it was a bit dramatic.
Mhm. Well, this is one. So I'm going to give Donald Trump some credit here. He knows the rhetoric game. He knows how powerful rhetoric can be, and so he's very good at that. Now, whether you're good at it and you use it for good or bad, what we saw in 2016 to 2020 is that he would sometimes send the markets reeling, right? this whole thing that happened, and I'm not sure this was Donald Trump or Elon Musk, which, by the way, with Elon Musk's current capitalization, people don't really understand this, but if you look at how much Elon Musk is worth today, he's worth 1.6% of the US GDP. Let that sink in for a second. That seem like a lot, but compared to your own income, where you're, 0.0000, 1.6% of the overall GDP of the United States, X, which used to be so, you know, the two of those guys, use their rhetoric tools, and I don't know if you guys remember because it got averted, but there was almost going to be a government shutdown, which economically would have been, suicide for the incoming president. But I almost wonder how much time Jerome Powell has left, how much time Mike Johnson has left, because Mike Johnson, in order to get a budget or a stopgap measure, in the last hours of last Friday, he actually had to partner with some Democrats, right? And so he kind of went against the incoming president-elect. He went against Elon Musk. And so I wonder, is his days numbered? Is Jerome Powell's numbered? And what is that beneficial to have new blood in the Federal Reserve, to have new blood in the fiscal policy, in the, legislative branch of the government? Is that good, or is steady Eddie? Traditionally, steady Eddie, keeping things consistent, has been best for the markets. So, I think we have to be ready to roll with the rhetoric. And I think that, just like we talked about Argentina, there's been so much rhetoric, it's got to be reconciled with actual results. So 2025, people are going to be looking for actual results. They've got the last 2 quarters, like you said, summertime, autumn, even into winter. Last 2 quarters, there's been so many promises, so much rhetoric. And so we're going to get a lot of headlines. We're going to get a lot of, using of rhetoric in order to, keep things. But we also, people are going to want to see results. They wanted to see results from Biden and they didn't get the results. And so they made some decisions. They're going to want to see some results this upcoming 2025 and into 2026.
Yeah, I actually like the Elon Musk influence because at the end of the day, he is a product creator. I mean, he created Tesla from a very basic version. The ability to create a rocket and to send it, I mean, that is the definition of results. It's like, I have an idea. I think this is how we're going to get there. And they're not simple ideas. These are pretty sophisticated. So we'll see where it goes. But I personally, I think it'll be a little bit smoother than it was the last time around. I feel as if Mr. Trump doesn't have as many people coming after him now, so he could focus on being a president for everyone. So I think that's good for the overall population. It's like, you got your 4 years and you can go relax, Donald.
That's right.
The best out of it.
And it wasn't contestable like it was in 2016. This was a clear referendum on what was going on. And so, yeah, I'm with you.
And some bold ideas out there with the immigration laws and tariffs and taxes and agency funding and things like that. So we'll keep an eye on it. But I think you made a really good point with the rhetoric,
being able to roll with the punches, man.
It's not going away. I mean, there's so much media hitting us every day from so many different places where it's like we have to take Dr. David's advice and filter it out and hone in our strategies and stick to our guts and our convictions and sleep well at night. All right. We had a good recommendation from last week's show that I think we wanted to follow up with. So Chris from Montana gave us a Nike play, and it seemed as if you talked through it, AJ. We were recommending some sort of an earnings play, and I think you said that Chris went ahead and pulled the trigger on that, and that was a good decision, right? I lost your audio there, AJ, for some reason.
I've been like fidgeting in my chair, and I totally hit the mute button on my headphones. Sorry. Hey, Chris was in our speed round last week, and he gave us Nike. And I looked at it and I said, "Oh my gosh, this guy must have done a earnings play." So I called Chris over the weekend ahead of the winter holidays, and sure enough, he did. And I recorded an interview, which we will probably release. But let me give you some insight. So I'm looking at Nike here. In fact, I'm going to zoom in. This is so. If you've tuned into our show in the past, you know this about me. If you're new to the show, here's what I like to trade: predictability. So going into an earnings play, what's predictable? Not much. But there is one thing that is predictable, and you have to think outside the box. What's predictable is going into earnings plays, people are going to be uncertain. And then after the earnings announcement, people, return to business as usual. And if you know anything about options, options can profit on uncertainty versus, confidence, which is, the before and after. That's what's predictable about in earnings, is that before the announcements, there's uncertainty. After the announcement, there's confidence. And we can turn that into a trade. And so that's what Chris did. He bought to open on the evening. Let's see, what did he tell me? Thursday, December 19th. So you see this earnings right here on our chart. In fact, I'm going to zoom in even further. I'm going to zoom into 1 month. You see this earnings on December 19th. This was after the market closed, right? So on December 19th, before the market closed, in fact, he did it at 3:30 in the afternoon Eastern time. So the market closes at 4. So he came in at a half an hour before the market closed. Excuse me. And he bought the Nike calendar spread. He used puts, and he did the January 25th weekly option, January 24th, 2025 weekly option. That was the back month. And he used the December 27th front month. So he created that calendar spread, and he bought these things for 48 cents each. So you buy these spreads in lots of 100. So he spent $48 for every contract he bought of these particular calendar spreads. Again, the two options, it was all the $77 strike price. They were all puts, and the two options in the spread, a calendar spread has two different expiration dates. The back month was January 24th of 2025. The front month was December 27th of 2024. So he created these calendar spreads, bought them for 48 cents. The next day after earnings was released the night before, he came in and at about 11:19 in the morning. So the market opens up at 9:30 in the morning. So through the first hour and then, into the second hour, he went ahead and sold these things. Guess how much he sold them for? $1.19 a piece. So he bought them for 48 cents a piece, and he sold them the next day, just held it overnight, allowed the confidence to come back after all that uncertainty. Sold them for $1.19 a piece. He made 71 cents per share in profit on a 48-cent investment. If you do the math, that's a return on investment of 148%. So for every dollar he put in, he got $1.48 back. That's pretty amazing for a trade. And this is not considered a day trade because he did it the night before and got out of it the next day. So there was no limit to the minimum amounts he had to invest. What a fantastic trade. I give Chris kudos for following our instructions to the T.
So I have a quick question follow-up on that. So 148% return sounds fabulous, but what does the negative look like? What is that risk, or what could you potentially lose that makes that 148 so, appealing?
Well, I'm not sure that it's as much of a loss as it's more of a, it could be a break-even trade. And so what happens here is if there's any, you'll notice that the price action, this bar on the 20th was not much different than the bar on the 19th. I mean, if I go to my options lookup tool and I put in our ticker symbol here for, he did Nike, NKE, and we go back to the 19th. So I'll let this load up here, and I'll go back to the 19th, and I'll let it load up again. So the two options that he did was this December 27th, and he did this January 24th. And he did the, let's close all these. He did the $77 put. So you'll notice that here's the December. It was going at the end of the day. So these are end of day prices. He used kind of the daily prices. The front month option was going for 365. And then on the next day, we wanted to go down in price. On the next day, here it comes. On the next day, it went from 365 down to 85 cents. That's absolutely fantastic, right? So you were asking about the downside. Just as a side note, the back month option, it on the day after it was $3.10. We don't want the back month option to change very much. So if I go back to the 19th, we're going to compare $3.10. The day before, it was $3.61. So this guy dropped, 41 cents, but this guy dropped like a whole bunch. This guy dropped like $2 or whatever the amount difference is. And that's what you want to create, is that difference in spread, because you know that those front month options will drop in price when confidence returns after earnings. And that's basically very reliable. Now, you were asking about, what could be the downside is if we get some sort of price action where when we're screening for these symbols, we look for symbols, we look at the previous earnings, and we look for symbols that are kind of boring at earnings. He played this, and some of the earnings are nothing burgers. Some of the earnings are not. I think Chris was following Nike's news headlines, and he was telling me, Nike looked like it was just going to be not really impress anybody during earnings, but also not piss anybody off. So he did this trade. But if there was some sort of pop or drop in price, it just reduces your gains. So you usually do these trades in mass. You do a bunch of these earnings trades, and the ones that don't move in price, I mean, they can double, or in the case of Chris, his more than doubled. It almost tripled in value. But if they do move a little bit, well, then, you might break even. So you do a bunch of these trades, and a bunch of them will double, and some of them will just break even because they move a little bit. That's how you play these particular earnings calendar spreads.
Yeah, and we tend to review more of these during earnings season, which I'm pretty sure has wrapped up, and we won't
Yeah,
be
Nike
getting...
reports outside of the normal season.
So, when does earnings season kick back in? End of January.
End of January.
Yeah. So we'll potentially have some more examples like this. But thank you for bringing this one to our attention, Chris. Love a good story to kind of help validate some of these strategies that we go through. Another name that we've looked at the past couple of weeks is CSX. Do you want to give us a quick update on what we're seeing there?
Well, and I think Kyle from Houston wants us to take a look at CSX. These CSX, if you guys have been tuning into the show, I made that my pick of the week 2 weeks in a row. And sure enough, we got ourselves an end of day signal on Wednesday. We haven't gotten follow through yet. So please make sure, if you're using my strategies, you pay attention to the end of day signals, but you also make sure on the day of trading, you program in some conditional trading rules, right? Make sure there's some conditions and don't trade unless those conditions are met. That's why I always advocate program them in the night before, put in your rules into your conditional trader, and then at the end of every day, see if your conditional trader saw that those rules were met and pulled the trigger. And if not, then just see if you want to do it again. So we didn't get our follow through rules met yesterday. It doesn't look like we're getting our follow through rules met today. Just every night that you have the signal, reprogram the conditional. If we don't get it today, we'll check again in on Monday, and we'll just keep running that trader unless the signal reverses or unless we get our trade filled. But do make sure you wait for follow through. But yeah, we finally got our signal, and I think this is going to be a great price to pick some CSX up.
All right, CSX, a name we've covered a few times here in a row. Looking at your pick of the week, something that come up to your attention. Similar commodities play, like we talked about last week from gold, but this one is natural gas, ticker symbol UNG. Is this the ETF?
I can't think of anything more boring than natural gas, which for me means I can create an income trade out of this. Natural gas is topping out. It's topping out around this $15.50 to $16 range. I am looking for the opportunity to short some of this. So that means I'm either going to sell to open some of the ETF, or there is a nice substitute option. There's a January 2026. So we're talking 13 months out to expiration, $20 put, which will act just like shorting the stock, but you can do it with a cash account. I'm looking to use either one of those, either short the stock or buy that put option that I just described. Though both of those will make money when UNG starts to fall back down. And I'm looking for it to fall back down $13 to $14. And at that point, I'll turn it into an income trade. I'll sell my put premium. I'll buy my protective call, and I'll rinse and repeat every time the cycle happens, creating a nice, consistent income off of this. So this is my trade of the week, UNG.
All right, UNG. AJ's liking that setup there. We'll keep an eye on it. Two names in our speed round. Let's run through them. Both from my neck of the woods out here on the West Coast. Terrell from San Jose, California, wants to know, AJ, what you think about the company Sentinel One, ticker symbol S.
Yeah, Sentinel One, AI play. Yeah, let's look at the chart. I see a bottom. I'm not sure if we've got follow through or not. Let's take a look. So to know if we've got follow through, I'm going to change and look at the intraday chart. I would have gotten follow through yesterday. Let's take a look. So here's yesterday. I want to be trading. Yeah, I got follow through yesterday. I want to be trading higher than my open range and trading higher than the confirming day close. So yeah, did you get in yesterday? That's the big question. Let's look at the option chain really quick. We'll use our handy dandy options lookup tool. And I'm going to look at, our most recent data, which is last night's data. This tool is so flexible. You can pretty much look up whatever you want. I want to look about 3 to 6 months out. So like this March to June time frame. And I want to make sure that I've got some liquidity. This is pretty liquid. I'm looking at the difference between the bid and ask. Maybe not so much. Definitely liquid. Definitely liquid. Let's look at June. Only 10 cents. You see, I'm seeing the difference between the bid-ask spread. This is 20 cents, actually. 15 cents. 15 cents. So even though we had that one, this is the $23 call that seemed a little bit bigger in the bid-ask spread. The other 8 options I looked at seemed pretty good with liquidity. So, yeah, I think that this could be a fantastic premium trade. So what are you thinking? I think you're probably thinking that it's time to either buy the stock, or if there's a substitute option, buy that substitute option. And then you're going to let it appreciate. And when you get any sort of signal of a top being found, sell call premium and buy protective puts. And then you're going to rinse and repeat and create this into an income trade. I'm on board with you, Terrell.
Yeah, and just for some context, Centennial One is a cybersecurity company out in Silicon Valley. So not sure the details of the business, but they're in the thick of the tech sector, that's for sure. So thanks for that, Terrell. Moving on to San Clemente. You're familiar with that territory, right? San Clemente.
Yeah, that's halfway between San Diego and LA.
Lewis wants to know your thoughts on social media play Pinterest, ticker symbol PINS, pins.
All right. I'm loving it. I got an end of day signal yesterday. Today, not only am I not getting follow through, but it looks like I'll have an end of day signal that reverses it. So let's make sure, again, we don't want to pull, this is where, being chill, being cool is, you want to make sure your signals are in place, especially right now. Let's make sure, if we're establishing an initial covering position, that we do it on good intel, good signals. And so, volume's low. We would expect volume to be low because that's Santa Claus time, these 2 weeks. But also, this, instead of getting follow through today, we're getting a reversal of the signal. So I want to make sure that I've got a solid light blue arrow followed by follow through. I can see buying some Pinterest. I'm going to pull up my options lookup tool. This time I'm going to look to see if there's a substitute option. So in order to do that, I put in Pinterest. I keep it the most current data, which is last night's data. I look at all the strike prices and I look at price components and I click submit. By the way, anybody can get access to this tool. You just have to sign up for free access to the web portal. And I like this August option. Let's see if we've got liquidity. And I really like this $15 call that expires on August 15th of next year. So instead of buying the stock is currently trading at about $30 a share. I could see buying this $15 call. This thing's trading at about half the price, around $15.60. So, include some leverage, buy some of these call options instead of just buying the stock. Either way works, because now you've got your initial covering position in place. And every time you hit a high, you sell your call premium, buy your protective put, and then rinse and repeat every time a high is found. And you create an income position out of this. Pinterest is great. If it doesn't get kicked in the butt because of earnings, it just likes to go sideways. The investors are fat, dumb, and happy and content. And so, yeah, I like it, Lewis. Just wait for the signal. There's all sorts of different opportunities there.
Yeah, it makes me want to do a little bit more research on what they've been up to. Just because I like the platform as a social media play. They're unique. They're a little different than the other ones.
I'm curious how they're monetizing these days. I remember that was going to be a question about it, but I definitely love Pinterest. Speaking of the different social medias, a lot of the social medias, like Facebook and Instagram, those guys really focus on our memories, right? We put up pictures of something that happened in the past. It's about reminiscing with others around your memories. Pinterest, with its dream boards, is all about thinking into the future. And I almost feel like if you can figure out how to monetize what people's future thoughts are, you're going to do way better than trying to monetize what people's past thoughts are.
Yeah, and I think the answer to your monetization is the advertising platform, which I think makes it unique because of the board psychology, where it's like I'm coming here for ideas. I'm coming here for moods that can lead me to a product. And so if you want to get in front of the right mood with your product, I do think there's some potential there. I don't personally have.
We should figure out how to target people who put trading on their dream
I
board.
see, that's the thing, though. I don't think our users are on. It's more of the, well, maybe, because we do have
Maybe.
those stay-at-home moms that like to bake and whatnot. So, yeah, maybe we'll look into it. So thanks for bringing that one up,
I love it.
Lewis. Pinterest.
Thanks, Lewis.
That is our last.
Lewis has been a long time subscriber as a program participant to Trading Trainer. So thanks,
We
buddy.
appreciate it, and that's our last speed round name of 2024. So as always, to the
Golly.
viewers, we appreciate you giving us those every week, and we do our best to try and give you a timely response. That's why we have the show. And yeah, AJ, any big weekend plans? Any big New Year's plans?
I got family in town, and so we're here in the Washington, D.C. area. I think we're going to go down in front of the White House. They put a Christmas tree for every state and territory. So I think we're going to go down and check that out and see how they decorate each individual tray. I think with all the states, I think there's like 56 or 57. I can't keep track of it all. But we'll go and see what those trees look like. I think my relatives want to check out all the monuments and memorials that are downtown. So I think we're going to go head
It
downtown.
makes me think of, are we going to have the state of Canada there? Oh, wait, no, not yet.
Are we going to have the state of Canada before we have the state of DC and Puerto Rico? Oh,
goodness
no.
gracious. 2025 is definitely setting up to be an interesting year.
It's going to be interesting. It's going to be interesting. And I feel like, and Sip, one of the reasons why I keep emphasizing the earnings trades is that they're not just earnings trades. They're trades where anytime there's some uncertainty followed by predictability. So headlines, think about this, folks. I just want to seed you, and we'll talk about it more in 2025. But anytime there's a headline in the future and people are nervous about it, they'll always, after the headline is released, no matter what the outcome of the headline is, once it's known and it's not like something that people can lament about and, hypothesize and get anxiety and anxiousness about, they get calm. And guess what? You can capitalize on that. And it's not just earnings. It's going to be anything. And I feel like for the next at least 2 years, if not 4 years, there's going to be a lot of these headlines that we can pull these option strategies. I'm always bringing it back to how can I profit using options? I have a feeling having this tool towards the top of our toolbox is going to be something that's going to be really worthwhile in 2025 and 2026.
And I know that the development team is continuing to evolve that options lookup tool, which seems to be a great a great tool to add to your trading toolkit, in addition to a lot of the strategies and even the community and some of your private sessions that you do with the group. So folks, new people on the show, new subscribers, if that's something that you want to be a part of, head on over to that links page. Browse some of the options, show some love, hit that follow, hit that like, hit that subscribe button. We truly do appreciate it. If you have any questions at any time, drop something in the chat, send us a DM, head on over to the site. Someone will get you some answers. Otherwise, AJ, thank you once again for a fabulous year of helping investors, new investors, old investors, get their minds right to continue to profit and make solid investment decisions. Appreciate your time. Appreciate everybody tuning in. That's all I got from my end.
Same here. Thanks, everybody.
All right, everyone. Have a good 2024. We'll see you next year. Adios.
Like and subscribe.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.